Best student loan refinance lenders. Student loan refinancing can result in significant savings in the proper conditions. Here's how it works. A new private company, usually a bank, credit union, or online lender, pays off the student loans you want to refinance, and you receive a new loan with a new interest rate. Below, we've found the best student loan refinance lenders for individuals who qualify based on factors such as interest rates, borrower availability, and hardship repayment alternatives. None of the lenders on our list charge origination or prepayment fees. However, some do charge late fees. In certain situations, companies provide a different refinancing product for parent loan borrowers. We evaluated them based only on their student loan refinancing options. Tips to compare student loan refinance lenders. Because the purpose of refinancing is to save money on interest, you'll most likely want to go with the lender that offers you the lowest rate for which you qualify. Variable rates are typically lower than fixed rates, but they may rise in the future. Choose a variable rate if you intend to repay your loan promptly. Refinance loans, like private student loans for college students, are not obliged to provide the same consumer safeguards as federal loans, such as income-based repayment schedules or forgiveness. However, some refinance lenders offer more than the customary 12 months of forbearance during the loan term, as well as additional loan modification alternatives for borrowers who are having trouble making payments. Refinancing is usually best for persons with high wages and employment security, but life is uncertain. If you believe you may need to delay payments or cut your monthly bill, choose a lender with a more flexible forbearance policy. Also, if you decide to refinance with a cosigner, find a lender that has a cosigner release policy so that you can assume full repayment responsibility whenever possible. This will protect your cosigner's credit from any unfavorable marks that may result if you are behind on payments. What is student loan refinancing? Student loan refinancing lets you combine multiple loans into one, thereby simplifying repayment. You'll work with a private lender that pays off your old student loans and issues a new one in their place. There's typically no fee to refinance student loans, but you'll need to meet the lender's requirements for credit and income. If you have strong credit or can apply with a credit-worthy cosigner, you could potentially qualify for a lower interest rate than you have now. Reducing your interest rate can lower your monthly payment and save you money over the life of your loan. When you refinance, you can choose new repayment periods that range from 5 to 20 years. A shorter term can help you pay off debt faster and save on interest, whilst a longer term may provide more reasonable monthly benefits but result in higher interest costs over time. Keep in mind, however, that refinancing federal loans converts them into private loans, which means they are no longer eligible for federal repayment plans, forgiveness programs, or other benefits. How does refinancing student loans work? When you refinance student loans, you take out a new loan from a different lender to pay off your current student debt. Your new loan will have a new interest rate and payback period, which means you may be able to pay less in interest or make lower monthly payments. Refinancing can also help you merge various student loans into a single obligation, making repayment easier. Refinancing is only available through private lenders. That implies that refinancing your federal student loans will result in private debt, and you will lose access to federal benefits such as income-driven payments, loan forgiveness programs, and more flexible deferment and forbearance options. If you want to maintain your federal student loan perks, Refinancing is not a good idea. Instead, a direct consolidation loan allows you to combine your federal debts into a single payment. This averages all of your student loan interest rates and rounds them up to the nearest 1/8%. Your new repayment period can be up to 30 years, but you keep all of your federal advantages. If you don't mind losing your federal advantages and simply have private student loans, refinancing can be a better option for you. A student loan refinance calculator can help you calculate whether refinancing can save you money or cut your payments. Student loan refinance requirements. Eligibility requirements for student loan refinancing vary by lender, but borrowers generally must meet the following criteria. Good to excellent credit. Lenders typically require borrowers to have good to excellent credit, meaning a credit score of 670 or higher. Steady income. You'll need to meet the lender's income and employment requirements. For example, the lender may require you to be employed full-time and have a salary of at least $35,000 per year. Minimum loan balance. Most lenders require a minimum outstanding loan balance to qualify for refinancing. The minimum varies by lender, but it's usually between $5,000 and $10,000. If you don't meet those requirements, you could still qualify for a private student loan if you add a creditworthy cosigner to your loan application. Pros and cons of refinancing student loans. Student loan refinancing can be a great method to manage your debt, but you need carefully consider your alternatives and investigate the advantages and cons. Pros of refinancing student loans. You could save money. If you refinance your loans and qualify for a lower interest rate, you could save hundreds or even thousands over your loan term. Simplify payments. Most borrowers take out several loans to pay for their college education, and keeping track of the different loans and payments can be stressful. When you refinance your loans, you can combine them into one loan and have just one account to manage and an easy-to-remember payment due date. Pay off your loans faster. With a lower interest rate, more of your payments will go toward the loan's principal rather than interest. If you make additional payments, you could pay off your loans much faster. Cons of refinancing student loans. Lose federal loan benefits. If you refinance federal student loans, you will transfer them to a private lender. They'll no longer qualify for federal benefits like income-driven repayment, public service loan forgiveness, or federal forbearance programs. Not everyone qualifies for a lower rate. Refinancing companies have strict eligibility requirements, and depending on your existing loans, you may be not eligible for a lower rate than you have now. You may need a co-signer. Because the eligibility requirements are stringent, you may need a co-signer to qualify for a loan. Co-signing a refinancing loan is a major commitment since student loans can be in repayment for 10 to 20 years. Is refinancing student loans worth it? Refinancing student loans is advantageous if you have a steady job and good credit to qualify for a low interest rate, which can save you money in the long term. Most lenders do not charge application or origination fees, so there are no upfront expenditures. However, choosing the appropriate loan duration is critical. Extending your student loan repayment term can lead to reduced monthly payments but greater long-term interest charges. Ideally, the payment reduction from refinancing should be from a lower interest rate rather than a longer period. If you have fair or bad credit below 670 on the FICO score scale and cannot qualify for an interest rate lower than your current rate, refinancing may not save you much money. And if your work is uncertain or there is a risk You will need to use payment relief options such as deferment, loan forgiveness, or income-driven repayments. It is probably advisable to keep your federal student loans. As we conclude our financial education journey, remember that mastering your finances is a lifelong process. By equipping yourself with knowledge and making informed decisions, you pave the way for financial stability and prosperity. Whether it's budgeting, investing, or planning for retirement, the principles of financial literacy empower you to take control of your economic future. Keep learning, stay disciplined, and embrace the opportunities that come your way. Here's to your financial success. If you enjoyed the video, please give it a thumbs up. Don't forget to subscribe for more content like this.